Okay, so this is live trading room mid-market update, a little bit later in mid-market, but wanted to talk a little bit about patterns today. We've been talking about patterns on our three indexes and how we use the bar chart patterns to kind of give us an overall directional bias view, and then we use the Able Trend charts to capture our signals on when to get in and oftentimes when to get out. Now, um, we were talking a little while ago in the live trading room about um, sometimes the best decision you can make is just take a loss on a trade. It doesn't mean it has to be a big loss. It just means that you have a choice. You can get into a trade and be prepared to manage the trade. You can get into the trade and perhaps take a loss when the trade starts to move against you. Now that happened for me today in the account that we profile in the live trading room, where you guys can see every trade that we do. You can see every win, every loss. It's full transparency in terms of you can see trades coming in, trades going out. So let's go back to earlier this morning. We opened two trades. We opened, sorry, three trades this morning, and we took pretty quick profits on those trades. Then things started to get a little iffy on the indexes, meaning they weren't moving quite as much as we would have liked them to when we were getting in. So we've had kind of a mixed bag today. We've taken profits of just over $800 today on some day trades that we did. So we've taken profits of just over $800. One of those was on an RUT trade, two of them were on NDX trades. Then we got into a couple of NDX trades where the follow through on the signal wasn't as significant as we had hoped. And so what we were able to do is we were able to manage those trades. We were able to cover them. And we took a long put in both cases that we sold to open another put against it and turned it from a long put directionally a biased trade to the downside, and we turned it into a long vertical spread that still has a directional bias to the downside, but it gives us an opportunity to win still, but we significantly reduce the amount of risk that we have in the trade. So when you get into a trade, we were having this discussion a little while ago, and I wanted to emphasize this. When you get into a trade, before you ever open the trade, you have to have some idea of what it is that you're going to do if that trade does not work out. In my case, I knew that I could, what we call, cover the trade. I could sell to open a strike against my long put, and I could turn the trade from a long put into a spread, and the spread was positioned so that I can still potentially make a profit on that trade. Now, expiration for one of the trades was this week. Expiration for the other trade was next week. So I spread out my expirations, and both of them are actually set up to win. There's not a guarantee that they're going to win because the trade is still active and the market could move strongly against my position. But from what I saw at the time that I opened the trade and what I saw at the time that I covered those two trades, they are set up to win. And that's what you need to do, folks, is you need to make the best possible decision you can based on the information that you have available to us. Okay, so there were the trades that we closed out of and took a profit on. They were day trades this morning. Then there were the two NDX trades that we had that didn't work out the way we hoped, but they're not losing trades. They were redesigned from a long put into a spread. And then we had two trades, one on RUT and one on SPX, where we took signals to go lower in those indexes. So we bought a long put in both of those indexes. And sometime after we opened those puts, we saw indications that the price of the index was reversing, and we're starting to see buy signals. In fact, there's a buy signal flashing right now, 15-minute buy signal on SPX. So what we made a decision to do, and Michael and I were having a discussion about this, as most of you heard in the live trading room, we made a decision to go ahead and close both of those trades out. Took a small loss on the two trades. I think the total loss on those two trades was about $70 or so, maybe less than that, $60 or so. And yet that still leaves us net positive for the day, just over $800. So one of the best decisions you can make at times is to close out of a trade that looks like the indicators are starting to reverse from what you originally saw. And that was the decision we made. Now, I had other options. I could have covered both of those trades. I could have turned them both into a long put vertical spread, but I already have two NDX long vertical spreads. I didn't want two more. The loss, including commissions and fees that I took on SPX and RUT, was so small, it was insignificant. And like we frequently say, if I have $800 of profit today, and let's say 3 weeks from now, we're talking in the room and scratching our heads and say, if I were to ask Michael, what day was it that we had those two trades that we took a loss on? We'll never be able to tell you without having to dig through our records. We'll never be able to tell you. And that's an important point to remember, because all we will see is that on today's performance, we had $800 of gains from all of our combined trades. And that's really all that matters. If you're net positive for the day and you're treating your trading like running a business, it doesn't matter if you had one customer that didn't pay you. If you're net positive for the day, you are making money. And as we've been talking about this morning, if you take that $800 times 20 trading days in a month, and you multiply that times 12 months, that's a potential of $192,000 income over the course of the year. Now, we don't have anywhere close to $192,000 at risk. I think the maximum risk we've had on those trades today is maybe about $15,000, and that's because we had more than one trade open at one time. But we recycle capital frequently, and that's what allows you to gain an exponential return, have a very big return trading options. So that's why at Options Moneymaker, I frequently talk about how to start small and grow big. Start with a small amount of capital. You can grow that into a large amount of capital just by following a few basic steps that we teach in our Profit Builder program and our Profit Accelerator program. Now, let's just take a quick look at the charts here, because there are some adjustments that I think are necessary on these charts. So I've been tracking this declining pattern on NDX, and I was doing that because there was one very obvious natural level of support here, and there was an obvious natural level of resistance here. But I have to say, I didn't really like the interpretation of that pattern, because I will use the Bollinger Bands, the 2 and 3 standard deviation Bollinger Bands, as a guideline to how closely aligned my pattern is. And what I saw was, as I was identifying that natural level of resistance and that natural level of support, that I was carving through the Bollinger Bands. So it would not surprise me to see some sort of a shift, either higher or lower. And what I'm seeing is we're starting to break above a little bit, above where I had identified resistance. So what I'm going to do is I'm going to make an adjustment here. I'm going to move my channel line, and I'm going to do so in a way where I'm going to capture these previous points of resistance. Back here, just when the cycle changed, back here when we had a natural level of resistance, in along here, and then in here. So that means I need to modify this just a little bit. So I'm bringing my resistance line up to the last natural level of resistance, which was at 1230 today. And now I'm tying into the current price bar. I don't know if the current price bar yet is a natural level of resistance because we haven't had subsequent price bars that are pulling away from it. But I need to do one other adjustment here. Oh, that could be a little sensitive there. Come on. There we go. We're going to go pull this up to support now. Now, one of the other things that I'm a little suspect about in terms of whether or not this is the most accurate interpretation of the pattern, two things. One is, again, I'm still carving through the Bollinger Bands. The Bollinger Bands are opening almost perfectly to the side in a sideways manner, yet I'm identifying a declining cycle. Now, my declining cycle may be accurate. I don't know yet. But the other thing I'm a little suspect about is there's only one natural level of support. So what happens is that causes that to potentially be a pivot of the cycle. So if the cycle, if the price breaks out higher, this can act as a pivot point. It could still be my one strong level of support, but it could change significantly the slope of the cycle. So I'm a little suspect about that, but it's what I have presently. It is the pattern that I'm currently able to work with. And if I zoom in here now, you can see that we have in fact just formed a natural level of resistance because the bar prior to the current bar had a high that was at 44.11 and the current bar high is 44.10 and the price is starting to move lower. All right, so that's the process that I go through when I'm scrubbing my bar charts. And then I will look over at my Able Trend charts and look for the signals. So when I see the pattern on my bar chart showing me a natural level of resistance or a natural level of support, and then I see a corresponding indication of my 3-minute or my 15-minute, 3-minute or 5-minute Able Trend chart that indicates a signal to get to enter a trade, that gives me a higher degree of confidence to enter that trade. Let's take a look at SPX. SPX is very similar to NDX. Look at here, we've got one strong level of support. That's the natural level of support right there. But because there's only one that acts as a pivot, we've broken above where I previously identified the declining cycle. So I'm going to take off the extension. I'm going to move, and what I'm going to do is I'm going to raise the cycle up to the current natural level of resistance. Just going to tuck this down a little bit right across these resistance points, and then I'm going to put my support line right back up at that one level of support. So that's changed the angle a little bit, and we still might climb higher. There still is a little bit of a disconnect between the slope of the pattern as I've identified it versus the Bollinger Bands, but that's what I have to work with right now. So I will continue to modify that as I see the pattern move and shift. Now RUT is a little different pattern. What I see here is that RUT is in a declining channel. That's this pattern right here. And I'm going to extend that out. So we're in a declining channel. Within that pattern, we were in a rising cycle. Now we've broken below the bottom of that rising cycle. And before I modify the current pattern, let me start with this natural low right here, this natural level of support. And let me just come across this natural level of support and see how that corresponds to resistance. So this one is a little more difficult. I think that the pattern that I just identified is actually more realistic than this one. This one was valid when we were running all along that line of resistance, but it's no longer valid. So I'm going to delete that one. And this shows me that we have support here. We have a natural level of support here, although we didn't come all the way down to where I'm drawing that level of support now, but not every single price point needs to be right at support or resistance. And then we have a natural level of support that just formed here within the last hour. And then that corresponds to the highs where we saw resistance and stalled out and fell away from the declining support. So right now we have a wedge pattern where we know that RUT will break out of this wedge either to the upside or to the downside. And if it breaks to the upside, we have a reasonable idea of where it could possibly move up to. We have a level of resistance up there. If it breaks below support at some point, we have a reasonable idea of where it could move down to, which would be the support of our channel. So again, you've heard me say this many, many times. We may sound like we're repeating ourselves, but it's important to go through this process, in my opinion, on a daily basis. So I'm trying to do this in real time for you each day. I think it's important to evaluate your bar charts. I like to evaluate it on a 10-minute, 10-day basis because it gives me enough granularity, enough detail in the pattern to really understand where my natural levels of resistance and support are. I like doing that. I try to do it 2 to 3 times throughout the market day unless there are significant moves that may require additional adjustments, but I try to do that 2 or 3 times throughout the market day so that I have a point of reference of where we're trading relative to the big picture pattern. And then I stay very focused on the 3 9-minute Able trend charts and the 5 15 Able trend charts. And those are the patterns and the charts that are going to give me my technical signal to enter a trade or to possibly exit out of a trade. So the headline today really is, yesterday it was about following your charts, not your emotions. The headline today really is, don't be afraid to take a loss on your trade. Don't be so married to your trade that you just won't let go of it and you end up getting yourself in bigger trouble on the trade. Look at your trading as a business. You've got profits, you've got expenses, revenue and expenses, and hopefully you have positive net gains at the end of each day. If that's not happening, then hopefully you have positive net gains at the end of each week. And of course, if that's not happening, hopefully you have net positive gains at the end of each month. But somewhere in there, you ought to be managing your trades to a point where you have a regular series of not positive net gains. Just like if you were running a retail store or a manufacturing business, you want to know at the end of your accounting period that you made money, that you've paid your employees, you've paid your leases, you've paid your suppliers, you've taken revenue in from your clients. You might have had some clients who didn't pay you. You might have had an equipment malfunction. You might have had a truck breakdown. Something occurred that cost you more money, or maybe you had a loss on a particular product, a loss on a particular client. All of that really just gets globbed into the total. And if you look at your trading, very similar to the way people look at their businesses, then it smooths out a lot of the emotion that so many traders fight and deal with. If you can smooth out that emotion and realize it doesn't matter that I took a loss, a small loss on 2 trades today, because I'm up $800 for the day, and if I was able to average $800 a day, I'd make $190,000 over the course of a year. That is a very positive way to look at your trading. And if you condition yourself and train yourself, program yourself to think of your trading that way and to think of it in very positive terms, you tend to eliminate a lot of the negative aspects of trading, the emotional aspects of trading that bog so many traders down. And that's what I like to see, is people walk away from all of that negative emotion that just causes them stress and anxiety about their trading. So the headline today really is treat your trading as a business, as a legitimate business where you're going to have profits and you're going to have losses. And once you have a look back period of whether it be a month or 6 months or 12 months, if you're net positive in your look back period, you have a successful business. And it's one of the best businesses. We'll talk more about this in the future. It is absolutely one of the best businesses you could ever hope to have. You've got no employees, you've got no overhead other than a small amount of expense that you pay Options Moneymaker to participate in the live trading room and a couple of our programs, but you really have no overhead. You have no commute to go to a job. You don't have leases and warehouses and staff and inventory and all of the traditional things that are associated with being a small business owner. It's one of the greatest businesses you can have. And I'll just add one other thing in there. And again, we'll talk about some of these things in the coming days. But my wife and I just recently moved across the country. We made a decision about a place that we were going to go live, and we had some very personal reasons that we wanted to live there. We did not have to take into consideration a job, a geographic location of an office that we had to be at, a geographic location of where employees were, or our business was centralized. That, to me, folks, is what I've referred to frequently as lifestyle freedom. I get to go live where I want to. And any of you who trade full-time or have a desire to trade full-time can have that same level of lifestyle freedom. So we'll talk more about those ideas and concepts in coming days, but this, in my opinion, can be one of the absolute all-time greatest businesses you could ever hope to have. Is there risk associated with trading? Absolutely there is. Is there risk with owning a small business, agreeing to leases, having employees who could get injured on the job, having equipment that will break down, having expenses? Will you find clients? Will you find customers? Absolutely. Anything you pursue in life that's worth doing will have a certain amount of risk to it. In my opinion, trading has a minimal amount of risk when it is done properly, and it has far greater benefits than most of your traditional small businesses that you might want to set up. So, touched on a few topics today. We'll expand on some of those in the coming days. Thanks for being part of the live trading room. Hopefully you're learning something, you're making some money. I know we had several of you that were sharing your profits with us today. Not literally, but sharing with us the excitement and enthusiasm of your results. And we're excited to be here. Myself, Michael, Aaron, Allison, the Options Moneymaker team, we're here to help you learn and get comfortable with your trading. So thanks for being here, and let's just go make some more money.